I am Dr. Piyush Singh, Counselor, Embassy of India, Berne. I welcome all of you to this webinar on opportunities in the Indian fintech sector today. Let me begin with quoting a text from Arthashastra, the pioneering treatise of statecraft, written 2000 years ago by Kautilya, the man who was the strategic mind behind the establishment of the modern empire in India. Kautilya writes, just as elephants are needed to catch elephants, so does one need wealth to catch more wealth. The idea resonates even today. The Government of India has a strong focus on financial inclusion, with more than 385 million new bank accounts having been opened since 2014. There is a strong focus on cashless economy. More than 198 billion digital transactions took place on India's unified payment interface from August 2016 to April 2020. There's a strong focus on startups and entrepreneurship, who are enabling improvements in the accessibility of financial platforms by designing suitable financial products. Fintech has the potential to reshape the financial services and financial inclusion landscape in India in fundamental ways. It reduces cost and improves access and quality of financial services. The Government of India has been undertaking a number of reforms for further increasing the ease of doing business in India and for further integrating a self-reliant India with the world. Today's webinar is a step in that direction. India and Switzerland are long-standing dynamic partners. The MISSP program has been run by the Embassy of India, Berne, for further strengthening the linkages between the Indian and Swiss business ecosystems. In the last 6 months, more than 50 companies have onboarded on this program. Today, our presenters will include the knowledge partner of MISSP, T&A Consulting, the legal and tax partner of MISSP, Roddle and Partner, and our guest speaker from NESCOM. With those words, let me invite the first speaker of the day, Mr. Tarun Gupta, partner T&A Consulting, to please take over and make his presentation as an overview of the Indian economy amidst the COVID-19 crisis. Mr. Gupta, the screen belongs to you. Thank you.
Thank you, Dr. Singh. And before I begin, ladies and gentlemen, first of all, I would like to thank you for taking time out for joining today's webinar. We are all in midst of some challenging times. As one wise man said, never let a good crisis go waste. And so clearly, we will see in this current pandemic, new business models, new business partnerships being formed. Can India be a preferred business partner for Switzerland? What are the opportunities in India? What are the challenges? What has changed in India and what is changing in India? The idea would be to present a balanced overview on India and not the Bollywood version. And the other fact, which I'm very well aware in, is that during this current pandemic, there has been a lot of webinars. In fact, today, one of India's famous industrialists tweeted that webinars should be, we should be very careful. So let's go ahead and make this webinar as interesting as possible and try to keep some key messages in this presentation. So let me begin on that note. India, I would describe 4 letters, the 4 Ds of India. What are those 4 Ds? Number 1 is democracy. Demography, diversity, and disparity. Democracy, in last federal election, we had 900 million people eligible to vote. About 600 million people voted, and the results came out in a couple of hours. Our democracy can be chaotic, can seem disorderly, and the decision-making can be delayed. But I'm proud to be living in the world's largest democracy. Demography, we are the youngest country in the world. In fact, in the current pandemic also, it has helped us because 93% of our population is below the age of 60. In fact, it said our median age is 29, and we have the largest population in the working age group between 15 to 65. We are expected to account for nearly 20% of the global workforce. We add nearly the population of Switzerland every month to our working population. But that's also a challenge. We need to create those many jobs. That's probably the single biggest challenge facing our policyholders. Third is diversity. India is more diverse as you move from Northern Europe to Southern Europe. Diversity in terms of eating habits, in terms of languages. We have 22 official languages. And disparity, that's the truth. 1% of India's population controls 60% of the wealth. Top 10% controls 77% of the wealth. Even if you look across the states, there is a difference of 10x between the most developed state and the least developed state, which is in other countries like Brazil, China, the difference is 4x. So a challenge for us is equitable development. And finally, if you look at one slide is on your right, India is the only country which has jumped from agrarian to services. And as our fellow speakers will provide, we are proud of our services sector, especially our information technology sector. But it's also important that we get our manufacturing right if we have to create those 8 to 9 million jobs. Hence, the focus is on manufacturing. Second, what's our vision? We want to be a 5 trillion economy. How ambitious is it? Very ambitious. It took us 60 years to reach 1 trillion and another 7.5 years to reach 2nd trillion. Now we nearly need to double our whole GDP in 5 years. We need a real growth rate of 8%. And we need a cycle of savings, exports, and investments. So how are we doing on investments? You see the graph on your left. Over the last 70 years, we got $600 billion of foreign direct investment, of which 50% came only in the last 5 years. And an interesting fact, 90% of that is greenfield. What it means is 90% of that is the automatic route. What it means is that you do not need a government approval and the economy is so open. So should you want, you do not need an Indian partner. And you do not necessarily need to share your intellectual property or your trade secrets. In fact, India is the third most preferred destination for greenfield investment. And why is that? Well, the slide here answers that question. We have made phenomenal increase in our ease of doing business. In fact, we have jumped 97 positions in our ease of doing business. And we are ranked amongst the top 10 improvers consistently. Now there is a new term, everybody heard of BRICS. Now there is a new term called MIFID, Malaysia, Indonesia, Vietnam, India, and Thailand. And if you see, India ranks very favorably amongst these countries. But one thing which India has different is a large domestic market. With that, I'll move to the second stage of my presentation on India opportunity. So India, my first stage are the 4 Ds, are the improved ease of doing business and our vision. So Indian opportunity can be defined in 4 alphabets: CFID, consumption, formalization, infrastructure, and digitization. Consumption. India is a consumption-driven economy. 60% of our GDP comes from consumption. We are the 6th largest consumer market in the world, expected to be 3rd largest in 10 years. Our whole private consumption expenditure is expected to increase 4 times. But here, a word of caution. Quite often, foreign companies overestimate the size of the Indian middle class. If you look at the top 2 of the pyramid, really, we have about 10 million households with annual household income of $30,000 plus, and another 25 million household with annual income between 15,000 to 30,000, which makes it about 200 million people. Now that is really the consuming class. A lot of numbers get bandied about, but really it's about these 200 million and growing fast, which is the consuming class in India. Second, it brings me to F, formalization. India has 75 million enterprises, which is nearly 22 times the number of enterprises in the US, which is 8 times the size of our economy. However, there's a challenge. If you look at our manufacturing companies, nearly 85% of our manufacturing firms has less than 50 employees. So why we need to bring about formalization? Only 10 million of these enterprises out of 75 million have any kind of tax registration. Only 5 million have any tax and social security. And it has various impacts. Number one, it has an impact on productivity. We define dwarfs as companies in the manufacturing sector which has less than 100 employees, even after a decade. They employ for nearly half of all the manufacturing firms, but only 15% of the employment. So what we need to create instead of dwarfs are babies which grow up into adults. Second, our tax to GDP ratio. You look at the numbers, it's about 17%, which is fairly low, even compared to other developing countries like Brazil, 34%, South Africa, 27%, China, 22%. We need to increase that. And finally, we also need to improve our sanctity of contract. And that's why we have the new bankruptcy code, where first time in India's history, we had companies being liquidated. So second, formalization. Third is infrastructure. This was a common complaint for a lot of foreign investors, which impacted our productivity. But now, if we have to achieve our vision of 5 trillion economy, we need to double our spend from $150 billion annually to $300 billion. And 70% of that will come from government or public sector. And hence, we need to improve our tax GDP ratio, what I mentioned earlier. How are we doing it? Are we doing the scale and the execution? Let me give you 3 examples. Today, our national highway length is about 140,000 kilometers. 30% of that has been built in the last 5 years. In the next 5 years, we'll build another 60,000 kilometers. So effectively, in 10 years, we would have doubled the length of our national highways. Railways, we have about 68,000 kilometers of tracks. So far, in 70 years, we've had electrification of 30,000 kilometers. But now, in the next 5 years, we will have the entire tracks electrified. Energy, we were an energy deficient country. Now we have pivoted towards renewable energy. Our solar energy installed capacity in the last 10 years has increased by 1,000 times. So what we have shown is scale and execution. And this brings me to the final D of the opportunity, which is digitization. And I know my fellow speakers will talk about, but here, what we have done is in India, identifying a person was a big challenge. So what we have done, we've created an India stack, which is known as presenceless, paperless, and cashless, and then the consent. We are aiming towards a holy trinity, which is 1 billion people on mobile, 1 billion people with biometrics, and 1 billion bank accounts. We are the only country where over 1 billion people have their biometrics, iris scan, fingerprints. We have opened, as Dr. Singh said, 385 million bank accounts. But what's the benefit? We are using this to transfer money to the actual beneficiaries. We have transferred over $100 billion of public welfare schemes directly into the beneficiary's account. And we have also moved to digital transactions. In January, we have over 1 billion unified payment interface transactions, which even Google has written to the US Federal Reserve that America should have a similar standard. Bank of International Settlements has said that India's digital financial infrastructure is good for developing and developed economies. And why we've been able to do that? Our number of mobile users using internet, nearly 600 million. And the amount of data used has increased by over 40 times in the last 5 years. So now we spoke about opportunity, but if your opportunity, there are taxes. So how are we doing on taxes? Well, we've had a huge reduction in our corporate tax rates. It's about 23 odd percent now, from 35%, effective is 25%. So nearly a 10% reduction. And if you start new manufacturing, it's about 17%. Very competitive compared to any other geography. Also on the indirect taxation, our logistics cost was a big challenge. India was not a unified market, but now what we have is a unified goods and service tax. Let me give you an idea of the scale. On this, our goods and service tax portal, we have nearly 9 trillion invoices uploaded since the time it was started. And our aim is to improve our logistics efficiency, reduce the cost of logistics from 14% to 10% of the GDP. The transit time for a lorry has reduced by 25 to 30%. With that, I come to the end of my second section of the presentation, which is India opportunity, defined in 4 alphabets: consumption, formalization, infrastructure, digitization, and we spoke about tax rationalization. And this is my last section, is the reforms, where four letters, four L's defined. One is laws. We have repealed nearly 1,000 laws over the last few years. And what we are trying to bring is transparency. Through all manual intervention, we are reducing, and we are reducing the compliance cost. As my slide here indicates, how we are reducing the time and the cost of import documentary credit. Second, which has been a challenge, is liquidity. So what we are doing now is that we had a new stimulus package. Instead of really throwing money, we said that the businesses need liquidity. So we have a collateral-free loan now of up to $40 billion. We are looking at a reduction in bank rate. So we have had these stimulus packages across our micro and small enterprises. We have also done reforms in terms of our agriculture, really reforms which are catered to that specific segment. We have not thrown money. So we've made sure that businesses which have survivability will get that liquidity. And third L is labor. This has been a problem for a lot of foreign investors. There have been over 200 central laws. There have been many number of federal laws. But now our plan is to codify all these 44 odd central laws into 4 codes, which are around wages, social security, industrial safety, and industrial relations. In fact, states are competing. And second big factor has been our land reforms. Acquiring a land has been expensive. Worldwide, the land cost used to be 2 to 3% of the project's cost. In India, it used to be 5 to 7%. Now we have an online registry by various states to buy land. Various states say we will give you approval in 30 days. If not given, take it deemed as approved. We could buy land from farmers. In fact, if you see the next slide, we have 44 industrial clusters. And today, we have ready land of up to 2 million square meters of industrial space ready for possession across these 44 industry clusters in the next 8 to 10 weeks. With all these reforms, how has been the success? Well, my last slide captures everything. Look at the marquee names across countries, across sectors. You look at automotive, chemicals, electronics, IT. We would love to see more Swiss companies. With that, ladies and gentlemen, I come to the end of my presentation, and I would like to summarize India about 4 Ds, the vision of India, as well as the ease of doing business. Second is the India opportunity, CFID, consumption, formalization, infrastructure, digitization, and our rationalization of taxation. And third is the reforms, which are the 4 Ls: laws, liquidity, labor, and land. Thank you, ladies and gentlemen, for your patience.
Thank you, Mr. Gupta, for a sharp presentation and for summarizing the Indian opportunity so well. Let me now move on to the next presenter of the day, who is Ms. Shivani Agarwal, representing NESCOM. NESCOM refers to the National Association of Software and Service Companies. It is a not-for-profit industry association and is the apex body for the $80 billion IT BPM industry in India. NESCOM's members constitute 90% of the industry revenue and have enabled the association to spearhead initiatives at local, national, and global levels. Ms. Shivani is from NASCOM Research. So, Ms. Shivani, we move on to you for the next presentation on the Indian fintech sector. Please.
Sure. Good morning, everyone. Myself, Shivani Agarwal, and as Dr. Singh just mentioned, I'm from the NASCOM research team, India, and I've been leading the fintech and the BFSI research initiatives for NASCOM for quite some time now, with over 10 years of experience in the Indian IT industry, working with MNCs like Infosys and Accenture in past. And here I'm heading the fintech and the BFSI related research activities for NASCOM. And today I will like to talk about the opportunity in the fintech sector in India for the global BFSIs specifically, taking it forward from where Mr. Gupta left, where he has already talked about India being a hotbed of opportunities in general. So moving on, this is a brief overview of what NASSCOM is. As Dr. Singh very rightly mentioned, NASSCOM is over 30 years old, a non-profit body, a trade body in India, whose main mission has been to help the IT industry in India grow and help technology products and service industry in India become trustworthy and innovative across the globe. So we have been in action since 1988, wherein the first decade was an initial phase wherein we were building the IT and the BPM industry in India. In the next decade, which was an inflection point not only for the Indian IT industry but for the global economy, with Y2K and things like that hitting the global economy, wherein NASSCOM forayed into number of other activities to build the IT industry in India, including digital skilling, NASSCOM Foundation, data security, and ER&D. And starting 2011, since there has been so many activities happening across the globe, the upcoming of emerging technologies like IoT, AI hitting almost every industry, NASSCOM has been very active in helping the Indian IT industry deploy these emerging technologies through their various initiatives and build up and diversify and build an economy that has GCC startups, including fintechs, and adopting all emerging technologies like IoT, AI, robotics, blockchain, cryptocurrencies, etc. And today, if you see the state, we have grown from a $50 million industry back 30 years ago to as huge as $191 billion IT industry in India alone in 2020. So this was about NASSCOM, and moving around forward, let's talk about the Indian IT industry. NASSCOM has helped for years Indian IT industry to grow. The tech industry is now $191 billion, which is one of the highest tech industries across the globe. And the footprint of Indian tech players has increased from 5 countries globally to 80 countries globally, and even more. And the Indian tech industry alone is contributing to around 8% of the GDP of India. And if you see the graph on the left side, today we are so huge. The IT industry in India alone is so huge that we have around 18,000 technology companies with 25 unicorns, which is one of the greatest numbers in globally, following US and UK. And another 52 unicorns are potential unicorns, which are in progress. And another 1-2 years, they'll be leading India again. We have 665 million internet users, USD 54 billion e-commerce revenue, 147 billion export revenue, employing around 4.5 million employees. And over the last financial year itself, we have added around $14 billion revenue and 0.2 million jobs, growing at a growth rate of 7.7%. So Indian industry, IT industry specifically, has grown at a massive scale. And this is to set in context how fintech, which is a crucial part of this IT industry and has been disrupting the economy nationally as well as globally over the last 5 to 6 years, is a crucial part of the Indian IT industry. And this in itself has shown a massive growth trajectory over the last 5 years. Now, if we talk about fintechs, as all of us know, are specifically technology players that serve the financial services, and they idealize and innovate using various technologies and various ideations to come up with innovative solutions to help digitally transform the BFSI sector across the globe. Now, Indian fintech bed is a huge bed, which has been growing at a scale of greater than 50% CAGR since 2014. And it is the third largest fintech market globally, just after US and UK. But not to forget, if you look at the graph on the right side, not to forget, even though it is the third largest fintech market globally, the percentage growth, year on year growth that India has seen in its fintechs over the last 1 year is highest across the world. It is 91%, which is phenomenal in itself, wherein US has been showing only an 8% growth in the last financial year in its fintechs, and UK has shown 75%. And China, which used to be another leader in the Asian economy in the fintech bed, even that has shown very less growth. In fact, in the last financial year, they have fallen. So India is heading globally in the percentage growth, and it is expected to grow at such phenomenal scale continuing from now also, even after the COVID impact, because even though we have been hit by COVID, fintech is not immune to it. But fintech in itself is so such a sector that can lead by pivoting into so many areas that can enable the BFSIs to transform digitally and grow the economy as a whole globally. So fintech is all set to grow, and especially in India, as we see, it has been growing at just a phenomenal scale. To talk about India alone, if you see on the left side some of the key numbers that I have mentioned, it has the number of fintechs in India has soared 3x times from just in the last 5 years, and the funding has grown again at a phenomenal scale to 4.6 billion last year. And moreover, fintechs have been widening their reach of adoption of deep technologies. And from 2014 to 19 itself, they have deployed amazingly innovative technologies that are being flooded in the market, like AI, ML. Most of them are still growing, they are still emerging. IoT, blockchain, RPA, big data and analytics, and humongous amount of innovative solutions that are being flooded in the market for the BFSIs to be deployed and help grow throughout the economy. So this was about how fintech is growing, and just look at the numbers of India, the fintech landscape in India. If you see, this is FY 2020, end of March 2020. There are as many as 4377 fintechs in India. Okay, out of which 729 are funded, and the amount of funding that has come in India till date is 10.8 billion. If you see, 10.8 billion is a humongous amount, one of the largest amount in India. And some of the top unicorns in India in fintechs are like Paytm, Mobivik, and PhonePe. Now, considering this in comparison to the global economy, global fintech landscape is huge, as we have just seen. And moreover, the sub verticals that fintechs in India serve is also expanding thoroughly throughout the years. Earlier, we were only in payments. Now we are in lending, digital payments, wealth management, trading platforms, cryptocurrencies, everywhere all these verticals are getting disrupted through the innovative digital solutions being offered by fintechs in India. And if I start naming them like Capital Float, PhonePe, Mobivik, then the list is actually endless. Okay, so the fintech growth story in India has been humongous, and there have been a lot of key drivers. Some of them, like Mr. Gupta has just mentioned, in India, there has been a huge regulatory push from the Indian government. There have been policies which have been supportive of significant FDI investments coming in the form of VCs, PE, angel investors. The big techs have been investing, may it be Google, may it be Apple, they've been in, may it be Facebook, they have been investing big time in the Indian fintechs. And another key driver is the unmet financial needs in India. There, as Mr. Gupta rightly mentioned, India is a land of 1.3 billion population, out of which there are so many adults who are unbanked. 225 million adults are unbanked. And moreover, there is a rising awareness. In fact, even post-COVID, this has magnified at an even huger scale, rising awareness about digitization. So India is a bed of $100 billion digital consumer transactions, which is still yet to be mapped, which is still yet to be channelized. Now, this is the amount of potential from the digital transactions that India can tap. And this is one of the push why India is a land where fintechs are coming, entrepreneurial activity in the fintech space is jumping like never before, and investments are flowing in India. Even today, Google has talked about investing in top players in India. Facebook recently invested in Jio. And Flipkart has been investing everywhere. Amazon has been investing everywhere in India. So the amount of investments that are coming in India and the scale of investments that are coming has been rising phenomenally. Just because of this reason, because the ecosystem in India is supportive for the fintech landscape in India. Okay. Now, having talked about this, the BFSIs have a lot of opportunity to breed from through collaboration with the fintechs in India. Not only do fintechs benefit in India and grow when they partner and serve the BFSIs, made with the national BFSIs or the global BFSIs, even the global BFSIs benefit in a massive scale by collaborating with them, deploying their solutions in a way that they helps them to rise steeper on the revenue curve, save costs, digitize their processes, and offer enhanced digital experiences to their consumers, which is the key ask across the globe in this COVID hit era. Okay, so let's move on. Let's move on and talk about what is this collaboration, and what is this land of collaboration between Indian fintechs and global BFSIs. What is this land of opportunity, and what can be unlocked in this? What has been happening till now recently, and what is the potential to be unlocked in this land of partnerships between Indian fintechs and global BFSIs with a mutual benefit for both of them? Now, if we talk about the global BFSIs, these partnerships help them to launch their digital products or service that they have only ideated or thought about, and move up the competitive ladder and move on digital transformation, or make a key market entry which they have been looking to tap for years till now in a reduced time, and which is as huge as 50% reduction in the launch time of such a product. And this is enabled by a collaboration with a fintech player who is already producing and mentoring these kind of solutions for the BFSIs, rather than starting from scratch in-house at the BFSI level. So if you look at a brief graph trajectory that I have shown for collaboration at the left-hand side, if you look at this, the feasibility check, if we see for these kind of projects wherein there is a partnership between a fintech and a global BFSI, if you see from ideation to product launch, there is a very smaller time because the number of steps involved is very less. A BFSI has to ideate on a product or a service or a transformation need that it needs. It has to look for a suitable partner in the Indian landscape, which is already specialized in those kind of services using the emerging tech solutions that are available, and collaborate. Some of them would be already having a platform like this, and the others would be budding up to come up with a platform or a service like this, customized on the base of the BFSI's need, and then come up with a product launch which is very fast. Now, considering this, if we see, there have been a lot of successful case studies also that have happened in the very recent past. If you look at the left side, if you look at the right side, and some of the cases that I have presented, they are the very nascent ones. NewGen, Zaggle, these are some of the payment fintechs, paytechs in India, providing payment solutions. And Zaggle is providing digital payment cards. Airtel is providing Airtel is providing internet first bank. MoneyTap and PaySense are providing innovative loans, digital loans. They are lendtechs. Okay. Now they have collaborated. Clearhouse is a European merchant acquirer. They have collaborated with these Indian fintechs. Visa has collaborated and come up with payment solutions. And this is like end of 2019. They've come up with innovative payment solutions for the PSPs, for the SMEs across the European market, across the Indian economy, and they're expanding. Airtel Payments Bank has, in collaboration with MasterCard, is offering customized financial products for the SMEs. And in the Indian landscape, if you see RBL Bank, IFL, they have collaborated, and digital credit cards and digital personal loans right from your app is being offered here. So the collab, and these all have been come in a very speedy rate, because there was a fintech in India who was already working on this, and there is a financial player who can deploy it and come up with the offering. Okay, so possible partnerships are platform-based partnership, like I talked about, open banking partnership where you only talk about sharing of data, banking as a service, and full-fledged alliances. And addition to that are short-term incubator and accelerator programs wherein you only look for the ideas from the fintechs. Now, this potential can be unleashed in a huge way, and in fact, 81% of the global banking executives believe that collaboration with fintechs is the best way to grow digitally and improve agility and reduce costs in the future of banking. Now, NASSCOM has an NIPP program which is specially designed to foster this kind of sustained engagement between large global BFSIs and innovative fintechs. We have open roundtables and flagship initiatives for vertical focuses for bringing along the global BFSIs and Indian fintechs together and unleash the path to growth. And talking about this, India is not just a land of budding, innovative fintech solution providers, but also a huge land where we can sell digital products. India is a land of unbanked population of 225 million, and fintech adoption among SMEs and consumer of 87%, which is highest in the world. So this is a land of opportunities just ready to be explored, and we'll be happy to connect at research at NASSCOM or NIPP at NASSCOM for any further collaborations that we can work around. And talking about a question that Dr. Piyush has posted, that how can we reach these fintechs? Can you introduce us? Now, reaching these fintechs is very possible. NIPP, as I just talked about, is a specific program from NASSCOM that connects any global BFSI, and with the fintechs, we organize roundtables, and you can get in touch with us, and we can bring you on board the vertical specific need and the technology specific need of yours from fintech. So, and there is another question: how deep is the penetration of fintechs in the financial industry? So it is very deep, as we say. Among the SMEs itself in India, there is an 87% of fintech adoption, which is the world's highest. So that is huge, and this is something that BFSI should look forward to deploy. So this is my answer, and thank you so much for listening over to, and I'm open to questions and open to connect to me or anybody in the research and the NIPP team from NASSCOM. Thank you. Over to you, Dr. Piyush.
Thank you, Shivani, for such a detailed presentation on the Indian fintech sector, and also telling us so clearly on the opportunities that are available for cooperation with the international fintech stakeholders, including from Switzerland. So now let me move on to the next presentation, and this would be a presentation from the legal and tax side by our legal and tax partner, Rotterdam partner. The presentation would be made by Ms. Ritika Arora from the legal side, and will be followed by a tax from the tax side by Mr. Gaurav Makijani. So, Ms. Ritika Arora, can please come on the screen and make a presentation.
Thank you, Dr. Singh, for the opportunity. Good morning and good afternoon to everybody. Thank you to the esteemed panelists for giving a wonderful overview of the Indian fintech sector. With this, I would now like to take over and take you through some of the legal considerations that one needs to bear in mind when entering into the Indian market. Now, there are multiple entry options that are available and prescribed under the foreign exchange laws of India. The slide that you have in front of you reflects on several entry models here. For example, you can enter as a LISO office, a project office, a branch office, or if it's an incorporated entity, then as a subsidiary, a wholly owned subsidiary, or a joint venture. Now, the scope and the ambit of each of these particular entity models would be different. For example, a LISO office, it's only a representative office. You cannot undertake any commercial business in such a case. Whereas for a project office, this basically is an extension of a project that has been granted to the foreign company here. Now, when we talk about an incorporated entity, the standard form that we see is an incorporation of a private limited company. However, depending on the business requirements, options of a joint venture can also be explored if you have a local partner and are looking to enter into a collaboration together. So it's very important to have a legal and tax analysis of what is a suitable form of an entry route for you. And of course, conversions at a later stage are possible with some compliances. With this, another important thing that has happened in the FDI, in the foreign direct investment sector very recently in the wake of COVID-19, is that for any kind of investments in from entities which are sharing borders with India, the neighboring countries, irrespective of the sector, now there is a requirement to obtain a government approval. So this is another thing that one needs to bear in mind if the investment is routed either directly or indirectly through a country which shares a border with India. So these are some things. Now here we provide an overview of some of the key legislations. Of course, India, as all of us know, is a land full of laws, but in consonance and taking forward the initiative to ease compliances, to actually facilitate ease of doing business, as is evidently reflected in the number in India's progressive jump in the scale of ease of doing business entities. We have set out here some critical legal frameworks that one needs to bear in mind. Now, when we come to the model of setting up of an entity, and here we are taking reference of a private limited company. Now, the process is centralized and also in line with digitalization initiatives, as was being mentioned previously as well. There is also an option of a fast track company incorporation. So we don't have to sit for months for a company to get incorporated now. The tax registrations can obviously be undertaken now in parallel with the incorporation process, which saves a lot of time, and the company can start its business quite rapidly, quite soon. Then opening a bank account, etc. has also, there are some easier ways, there are some relaxations that are coming in time and again, the idea being to facilitate ease of doing business. Now, specifically in the fintech sector, the Reserve Bank of India has issued directions for issuance of foreign currency prepaid cards / operations and issuance of payment instruments. The FDI policy allows 100% investment under automatic route for regulated financial sectors services. However, there are some conditionalities, for example, the minimum capitalization norms, for which sector-specific guidelines would need to be looked into. Then another legislation is the Payment and Settlements Act for operation of payment system in India, and for operating non-banking financial companies, there is a specific set of guidelines. So this is an overview of the sector-specific legislations. Fintech sector in India is highly regulated by the Reserve Bank of India. So it is important to have an in-depth understanding of these legislations when entering into the market. Coming to the law enforcement in India, recognition of foreign judgments, including Switzerland judgments, are only possible after filing an execution proceedings or filing of a civil suit. So this is one thing that one needs to bear in mind. All contracts should appropriately account for what is the choice of law and place of jurisdiction that parties want to agree on. We have a robust Arbitration and Conciliation Act with highly modernized and structured institutions now available. And there's a lot of transparency in our judicial system, and we have comprehensible judgments and precedents to understand any key legal position. Coming to another aspect on insolvency and bankruptcy law, which was touched upon by Mr. Gupta as well, we have legally defined timelines for completion of the resolution process now, which is quite a welcome change. There are some thresholds that are in place to initiate the process of insolvency or liquidation. There is electronic and digital information that is available about the companies in insolvency processes, and also in terms of the judgments and the orders that are passed for such respective companies are available in the public domain. Now, this is one sector where we are seeing continuous developments and amendments coming in, because it has been realized that this is a very critical law, and ever since this law has come into force, we are seeing a lot of positive development and a lot of satisfactory response in the implementation of this particular legislative framework. Now we come to the last part of labor laws, which of course we are mindful of the fact, and as Dr. Gupta has already touched upon it, the process of codification of over 44 central laws in 4 categories is already in process. This would be the Code of Industrial Relations, Wages, Safety, and Social Security. So this unification would definitely be a positive positive development. Another thing is there's a lot of there is a lot of streamlining happening and standardization of labor laws and regulations. We have in place model laws and regulations. So for example, each state had had its own state specific Shops and Establishments Act. So there is a process underway for modernizing for a model law of in this respect as well. And we are also noticing a lot of positive change in ease of compliance. There is a unified portal, there is a labor identification number, and a lot of digitalization is happening in this sphere as well. So we are noticing that everything is now moving towards ease of doing business in terms of at par with the global standards, and that really facilitates India and makes it an attractive destination for further investments, especially from foreign countries. With this, now I would like to hand over to my tax colleague who will take you through the tax updates in this sphere. Thank you.
The tax update which are relevant for any foreign investor before they invest anything in India. So what are the tax related rules, or what are the points which they need to keep in mind before investing into India? So basically, primarily, there are 2 things which they should keep in mind. One is the compliance requirement in India, and what would be the compliance cost related to such compliances. And second would be a tax cost on their supply chain related management thing, or carrying out any transactions. So what would be the tax cost on that particular compliances or the transaction which they have to keep in mind. Now, basically, India tax legislative framework is very well structured like any other European nation, and this is divided into 2 parts. One is the direct tax, and another is the indirect tax. Now, important point is that the direct tax, this can be divided into further 4 parts. One is the domestic tax law, which is the Indian Income Tax Act 1961. Now, this provides for the rules and mechanism of how to compute taxation in India, what are the compliances requirement, and what are the administrative provision one need to take into consideration while carrying out any businesses in India. Second is the double taxation avoidance agreement. India has a tax treaty arrangement with more than 90 countries, including with Switzerland, and it provides for various beneficial rates which India has agreed with Switzerland that they will provide to the Switzerland foreign investor who invests in India. Also, it takes care of the situation of double taxation which any Switzerland company would be facing because of investing in India. Now, as far as transfer pricing rules are concerned, it's more or less very similar and in line with the OECD guidelines. So this is just a general compliance which a foreign investor has to make. India also has this country by country reporting requirement agreed by all the G20 nation and the OECD nation. Now, coming on to the important updates which a foreign investor should keep in mind is that now the corporate tax rate in India has been reduced to 22% from erstwhile 30%. And if you are a manufacturing concern, then further the rate further reduced to 15%. And coupled with this, now there was a concept of the dividend distribution tax, which has now been abolished from 1st April 2020. For foreign investors, this means that now they will be able to claim the beneficial tax treaty rates, which is 10% as against the earlier rate of 20%. So there is a benefit of 10%. Now this coupled with the reduced corporate tax rate, and since there is a participative exemption in the Switzerland domestic tax law, there is an overall tax cost saving of approximately 15% from investing in India, whatever taxes you pay in India, then the repatriation tax cost and the tax cost in Switzerland. So overall you save 15% because of these changes made by the Indian government, and this makes the Indian destination a competitive market as compared to all the Asia Pacific tax country. Now, to further attract investment, government has provided that any borrowing which Indian company make from a foreign company, and foreign company receive interest on that particular foreign currency loan or ECB, then a reduced the reduced tax rate of 5% would be applicable on such interest income which is earned by the foreign company. Now, further to reduce the tax litigation, the Indian government has provided a number of options to any foreign investor. One is the advance ruling mechanism. This means that you can go and approach the tax authority and obtain tax implication on your proposed transaction. Also, it also provides for mutual agreement proceedings, wherein you can ask the tax authority, and then the tax authority will sit together, both Indian and Switzerland tax authority, and they will sort out the reconciliation if you have any issues facing in any of the countries. Now, India also provides for advanced pricing agreement mechanism, wherein you can approach the authority and pre-agree the rate at which you will enter into the transaction with your related party, and this will avoid the transfer pricing related tax matters in future. Now, as far as the fiscal incentive is concerned, if you generate any employment in India, you get some tax deduction on that part also. So if suppose you're paying euro 100 as a salary to any particular employee in India, and that's a new employment you have added into the in your company, then you get euro 90 as an additional deduction over and above euro 100, and that is available to you in 3 parts subject to certain conditions. Now, apart from that, now government is also working on the tax compliances simplification, and for all the interest, dividend, or fees for technical services like income, which are passive in nature, if the proper withholding tax has been done by the Indian party, then there is no requirement to file foreign tax returns in India by the foreign company. So this was it from the direct tax portion. If coming on to the indirect tax part now, so India levies the custom duty on the import of goods, and it also separately has a foreign trade policy to promote make an investment in India. Now, what's provided in foreign trade policy is that if you export any goods or export any services out of India, you get some remission of duties or some duty drawbacks or other benefits for earning the foreign currency exchange for Indian government. So that's the beneficial part provided in the foreign trade policy. Last but not the least, India has introduced goods and service tax law in 2017. Now this provides that what government has actually done is that they have unified all the state and the central law which was there in applicable before 2017, and they're unified into one single law. So for a foreign investor, it means that it becomes very simple to interpret or analyze, and they don't have to analyze the state-wise law before entering into any transaction. And it also lead to reduce the number of compliances which any company has to make. Now, as far as the movement of goods is concerned, they have introduced a concept of e-way bill under the goods and service tax law. This means that there would be a faster movement of goods. And as mentioned in the income tax related aspect, now the GST law also has this something called advance ruling, wherein a taxpayer can approach the GST authority to determine the tax implication on their proposed transaction from GST perspective. The only difference between the income tax authority and GST authority advance ruling is that the GST authority advance ruling are pronounced by the commissioner level. So you have to maintain your backup documentation in a very good manner, because they will try to negate your decision or your thought process. And second is that there are a number of GST authority, and there is a specific timeline wherein they have to deliver. So in a way, if you have a good fact and you think that you will succeed, it's a good opportunity that you go to the GST authority, because if there is a specific timeline, you are bound to get some clarity on the GST related aspects. So that was it, the major, the important points from for any tax foreign investor that they need to keep in mind before investing in India. So I'll just hand over to Dr. Singh now.
For that. Now I move on to the last short presentation to be made by Mr. Tarun Gupta, partner TNA Consulting, focused on opportunities for Swiss fintech companies. So, Mr. Gupta, you can come on the screen and.
Yeah, Dr. Singh, if you can hear me. Yeah.
Yeah.
Excellent. No, we are having some technical challenges today, but everything is good. Okay.
Everything is fine.
So, team, I promise this is the last presentation, and why this presentation is geared is towards specific opportunities for Swiss fintech companies. Okay, so what are these specific opportunities? We've got a very good overview of the whole fintech sector in India. So you will have this copy of this presentation, but I'm going to go through fairly quickly in 5 minutes, just key messages on some of the segments. Let's begin. So this slide talks about India's population is 1.3 billion. How many active digital payment users are there? 100 million, ballpark. Okay. And you see the 5 million point of sales terminal. 3 years ago, we had 1.5 million. So, and the next point is the clusters, which you see on the map of India. So if you're a fintech company, quite likely your potential partners are in any of these 5 clusters. So 2 messages, 100 million active users, the clusters in India. I'll go to the next slide. Fintech lending. This is a huge segment. Look at the credit gap on the top right of the presentation. We have a credit gap of nearly $250 billion Swiss franc. Okay, the digital market, lending market. And if you see, I mentioned in my earlier presentation, the small enterprises, about 60 million, only 10% have access to formal credit. That was the whole formalization. So what are the business models? We are talking about lead generation, credit scoring, full scope stack lending, and we are talking online lending. And second, you see the interest rates. We are talking about the biggest segment being the medium credit score data, interest rates of 16 to 24%. That's the unaddressed segment, which accounts for 90% of the market. So lending is a huge play in India because of that only 10% of our micro small enterprises have access to formal lending. And these are the 4 business models. Second, wealth tech. We've had about only 4% of Indian households invest in equities. And if you look at the graph on your left, top graph, we have about $300 odd billion in our mutual fund, which is about 15% of our GDP. Whereas in America, it's about 85%. So we are having a new trend of retail investors coming into mutual funds. And wealth management, there are various areas. We talk about digital brokerage. We talk about robo-advisory. We are talking about software, asset management software using AI and data analytics. And we have had several Swiss companies who have expressed interest in providing solutions around this. But I must say that it's not a billion population. We are talking about really, if you remember my pyramid, really the top 2 portions of the pyramid where these wealth tech solutions are. And look at a number of dollar millionaires. We are talking close to 1 million odd people who have liquid investments of over $1 million. Next, we move on to InsurTech. Our insurance penetration is amongst the lowest. You look at our insurance density, you look at our non-life. The message here is that the non-life insurance penetration, that's where we are seeing new business models emerging. And then also in terms of faster claim processing, as well as authentication of claim processing. And we see increasing use of blockchain. In fact, we have another webinar planned around that in this area, how we are seeing using of blockchain and underwriting. Payments, India is the largest recipient of remittances in the world. We got about $85 billion of remittances. And clearly, we've already spoken about how many retail payments we are doing. And look at the number of online, the payment wallets. That is the big area of growth. Here we have, in fact, number of our retail transaction, digital transaction has grown by 10 times in the last 5 years. So the big growth story is the mobile wallet and our unified payment interface. And this slide itself gives you the breakup. Even if you see the by value, we have grown, only paper transaction account for only 5% of the value of this transaction. In nutshell, these are the 5 big emerging opportunities: open banking, bank tech, reg tech, and cybersecurity. I'll be happy to take any questions at the end of the presentation. Thank you, ladies and gentlemen. Over to you, Dr. Singh.
Me just move on to the Q&A session. I'll request all the presenters to be very brief in their answers. The first question would be to Mr. Gupta. It's from a company which says that we are interested in knowing if and how MISSP could facilitate partnerships between us and fintech firms in India. So you would like to respond to that?
Sure. I think the momentum in India for the Swiss SME program is geared towards helping Swiss companies via different business models. And one of the business models we've seen Swiss companies is through partnerships. Now, if I look at the company, for example, providing loyalty solutions, the mobile wallet companies can be prospective partners. The credit cards companies can be prospective partners. So under the MISSP program, there is a specific package to help a Swiss company identify the right partner. And as we speak, we are working with several such Swiss companies. And post this session, we'd be happy to get into one-to-one meeting with the Swiss company.
Okay. Thank you, Mr. Gupta. I'll come back to you later. Now, may I pose the next question to Ms. Shivani Agarwal? It reads, how to onboard digital transfers for payment at a national level, knowing that ride hailers are still not equipped for doing so. Ms. Agarwal?
Yeah. So I'll just briefly answer ride hailers across the globe. There are many ride hailers like Uber and even Ola. Now, in order to onboard digital transfer for payments, there is a possibility of collaborating with a lot of fintech players in the paytechs sector, like the Paytms and Paytm, the PhonePe, the MobiWig, that I've also mentioned in my presentation. And there are a lot of there are a lot of fintechs and payments which are offering payment gateways like Razorpay and all, which can be integrated through APIs within their platforms of these ride hailers, and it can be taken forward to introduce digital transfers facility. So this is one. Collaborating with the paytechs in India can be a quick option, and the API integration option can be a quick partnership model for the ride hailers.
Thank you. Thank you, Ms. Agarwal. I think that answered the question very well. My next question is posed to, this is regarding it's for Gaurav. It says that, can you please share information for OCI card holders to start fintech in India? Could you hear the question, Gaurav?
Yes. So basically, OCI concept, or the overseas citizen of India concept, was introduced just to reduce or ease, providing some ease in the kind of visa requirement for any citizen who was earlier an Indian citizen or an Indian national, and now they have got the nationality of any other country. So the only benefit which they get as far as the citizenship is concerned is related to the visa requirement or the immigration requirement. Apart from that, they're treated as non-resident only from investment perspective. So they would be treated as non-resident. And if they have to invest in India, they would have to go through the FDI route, the foreign direct investment route. But if they want to invest a portion in any existing company, they can also explore the option of registering themselves in any stock market. And then as a foreign portfolio investor, they can invest in any fintech company.
Okay. Gaurav, can we have some paper on this or something which we can share with the participant?
Sure, I'll share this with you. Yeah.
Okay, thank you. Thank you. Next question I'll pose to Ritika. The question is how India is positioning regarding cryptocurrencies. So yeah,
okay.
Interesting question.
Interesting question. I will keep it brief. There are three major developments that I would like to briefly touch upon here. Firstly, the RBI, the Reserve Bank of India in 2018 issued a circular by which it banned banks and other financial services from dealing in cryptocurrencies. That was first. Now, this led to a lot of unrest and ambiguity, following which the Supreme Court of India very recently struck down this particular circular. So the position can be understood to be that there is no ban on cryptocurrencies. But the twist here is that there is a bill by the government. The government is proposing there is a draft bill actually for banning of cryptocurrencies, but that's still in the draft form and for discussion purposes. So this is where we are at the moment as we speak on cryptocurrencies here.
Okay, thank you. Thank you, Ritika. Maybe I could also have Mr. Gupta to bring in his perspective on this matter.
Ritika said, in India, we've had some international exchanges and a lot of trading of cryptocurrency. In fact, during this pandemic, we have had a 10x increase in the trading of cryptocurrency. What we do not have a very active is the ICO market. So RBI has formally said there is no ban, and we expect, provided this bill, there is some gray area, but we expect the international exchanges to become more active on the trading.
Okay, thank you, Mr. Gupta. With those question answers, I think we come to the conclusion of this webinar. All the presentations that we made today would be available on the MISSP.ch website. We'll also be turning this webinar into a video and a podcast, and we'll be sharing that on our YouTube channel and uploading on our website. A number of questions were actually posed also relating to blockchain. I would tell the audience that there's a specific webinar happening on the opportunities in the Indian blockchain sector at 2 p.m. today. You can register yourself by logging on to the MISSP.ch website. It has the registration link for the blockchain webinar. I hope that we have been able to bring to the fore this point that there are tremendous complementarities between India and Switzerland in the fintech sector. And the embassy, the MISSP program, will be very happy to have you onboarded on this program for further strengthening India-Switzerland relationship. With those words, I thank you all and look forward to seeing you all again at 2 p.m. for the blockchain webinar. Thank you.